should investors be watching out for? Udayan Mukherjee caught up with Madhu Kela, the chief investment strategist at Reliance Capital, and began by asking him whether banks will lead the recovery in 2016 or because of the correction.
With the improved regulation, this again for the first time we are seeing the RBI governor being so vocal about this very, very critical subjects. We have not seen any RBI governor in the last 15 years who has been so vocal about non-performing assets, about provisioning of banks. So in the general transparency, I would say that the banks will be compelled to provide much more than what they've been providing. So what you are saying could be true for the next 2 to 4 quarters. The bank's earning could get impacted because of the incremental provisions which they have to make. But again, are they getting more healthier than what they were ever before? The answer is yes, because you have whatever you have been hiding in terms of provision, it is all coming to fore now. And once all these provisions are being made, clearly with this low base, there can be a lot of positive surprise in earning.
Other big leader space which has shown disappointment, Madhu, is pharmaceuticals. And private bank and pharma were the two big pillars of this market in 2014. And they've lost their way. Are you alarmed at the way some of these big pharmaceutical names like Sun, Dr. Reddy's have collapsed this year? Or do you think that has the potential to lead the market again?
One should be very watchful and very mindful that, US FDA approvals are coming more quickly than what they were coming. That may lead to, the products getting more competitive, especially in the US markets. And the margins which a lot of these companies have enjoyed to the extent of 35–40%. Some amount of that margin could come under pressure because of US FDA approvals coming quicker than what they have been coming. But selectively, the companies which are able to migrate from this general generics to the complex generics and to biosimilars, these are the companies which will continue to command high valuation and high ROCE. So sector as a whole, you cannot take a view, but select companies I am still very positive on the pharmaceutical side.
Let me ask the contrarian in you, Madhu, whether you would buy the two sectors which people hate the most right now, metals and real estate.
I would say, Udayan, I am really looking at these companies, even especially in the power sector, which has not done anything in last 5–6 years. So whether it is relating to distribution, whether it is relating to capex in the